I would say good morning or good afternoon or good evening. I don't know when you're going to watch this because it's recorded, and you have the luxury to watch this at any time. But welcome. I'm glad everyone is here tuning in. My name is Isaiah Green, Central California Regional Advisor, Assistant Deputy Director with the Office of California Small Business Advocates, and I am again excited for the third episode. The third episode. We're already on the third episode, Bianca. This thing is going by fast. We're already
Yeah.
in April. We're already in April. Well, I'm excited to continue to bring to you your labor and employment topics. Again, I think this is very important. I appreciate Bianca for all the knowledge and wisdom that you have blessed us with over the last 3 months. And I'm excited to learn more. What are we going to dive into today, Bianca?
Today, well, first of all, hello, everybody. Thank you, Isaiah, for the introduction. So we're talking all about employee classification and why it matters.
That's going to be fun. That's going to be fun. I've been an exempt employee, I've been a non-exempt employee, and so being able to get into the meat of the potatoes of why this matters is going to be super crucial. So I'm excited to learn more.
Awesome. So thank you for joining us, everybody. Now, I am an attorney. That means, of course, I like to give disclaimers. So just a reminder that content for this presentation, as is the case with all of our other episodes that you've seen and will see in the future, nothing in this presentation, of course, should be relied upon as legal advice. We ask that you do consult a qualified attorney if you have particular questions or scenarios that you need addressed. Also, just a reminder, the contents of the presentation are current as of the date of the presentation. So to the extent that you're going back and watching this, just keep in mind things like minimum wage rates, and the rules can change periodically. So keep that in mind. And then lastly, we ask that the presentation not be recorded, duplicated, or distributed either in whole or in part without written consent from CalChamber and CalOSBA. All right, so the agenda for today, what we're talking about, again, employee classification and why it matters. So really, when we're having this discussion, it's important that the terminology that we use matters, how we're treating our employees in terms of whether they're salary, hourly, all of these things matter because there are a lot of rules that we have to follow in California. And if we get them wrong, there's a lot of liability. So really, the why it matters, spoiler alert, it can be very expensive. So misclassification for whether you're classifying somebody as an independent contractor when they should not be, we'll talk about what that means. Or if you're classifying an employee as exempt, let's say, when they should be non-exempt, again, that can also be very costly because what that means is you haven't been following the rules for your non-exempt obligations. That can mean several wage and hour violations going back 3 to 4 years. You can end up with Private Attorneys General Act claims. Those come with civil penalties on top of the underlying claims that are the lost wages for those claims, as well as attorney's fees and costs. They're very expensive to defend. So ultimately, the why it matters is you don't want to get yourself into hot water with the labor commissioner's office with lawsuits that, and again, if you're treating several employees across your across your workforce, again, these can be subject to like class action claims, again, very expensive. So we're going to first talk about independent contractor versus an employee. Now, that's going to be in the category of we're just looking at you have a job that needs to be done. And so the question is, this worker who's going to conduct work for you, are they an independent contractor or are they an employee? Again, this is very important and you have to get it right. Independent contractors are very limited these days in California. So we'll talk about that. Then when we are in the realm of, okay, we know somebody is going to be our employee, let's say they don't meet that independent contractor test, then the question is, are they non-exempt or are they exempt? So we're going to talk about the differences between those, how somebody can be exempt, and then what are some of the special rules that we have to remember for our non-exempt employees. Again, this is why it matters, because if we misclassify as exempt, we're not following those rules. With that comes liability. We're also going to talk about the importance of timekeeping and payroll records. This is not limited to non-exempt employees, really for all your employees. We have timekeeping and payroll record obligations. There are some pieces that will not apply for our exempt employees, but in large part, you need this for all of your employees. And then we'll also talk about that itemized wage statement. This is also referred to as a pay stub that comes with our timely payment of wages that we provide to our employees. This is another highly litigated area where if employers get this wrong, it can subject them to PAGA actions, class action suits. So again, it's important that you know all of your obligations around that. It's a very technical area of wage and hour law. And then we'll wrap it up with some key takeaways and reminders. All right, so going into independent contractor versus employee, again, if you're thinking of, if you can imagine like a flow chart, decision chart, and you're starting out with, again, you have a worker. The question is, are they going to be an independent contractor or are they going to be an employee? Now, the presumption when you have somebody who's conducting work for you, you are a hiring entity, the employer, or somebody who's just hiring somebody for work. The presumption is always going to be that that person is your employee. And again, meaning you have all those obligations that trickle down from having that employee. It is unlawful to engage in what is referred to as willful misclassification. That is, somebody should technically be your employee, but let's say, oh, it's just so tempting. I just have this short-term job that I need somebody to do. It's for a project, 6 months maximum. You don't want to go through the trouble of having to onboard somebody, deal with all the I-9s. Can I just issue them a 1099, for example, and I'll just pay them whatever negotiated rate we're talking about? That's very dangerous in California. I would not suggest that you do that. Again, you always want to presume that somebody is your employee. We have a very strict test. This is referred to as the ABC test in California. Now, there are various exceptions to certain industries that will fall outside of the ABC test. There's a different test that then can be applied. It's more flexible. So there is that I'll mention. But again, if you as a business owner, and especially if you're a very small and you're just starting to need that, assistance, and it doesn't feel like your business is big enough to really have a whole roster of employees, just be very wary of independent contractors and the temptation to just issue that 1099, because again, there's a lot of liability that comes with it. It's going to end up costing you likely much more in the long run if you're not getting that right. So let's talk about what the test is and how we know somebody is legitimately an independent contractor under this test. There are 3 elements to it. We have to meet all 3. So the first is that the worker is free from the hiring entity's control and direction in connection with performance of the work, both under the contract for performance of the work and in actually performing that work. So again, they have free reign. We're not controlling their work. Secondly, the worker performs work that is outside the usual course of the hiring entity's business. So what do we mean by this? So as a classic example that is often used around this topic is, let's say you have a retail store. You are operating a retail store. You have a bathroom that has plumbing. You have plumbing needs. You need to hire a plumber, right? So that plumber is outside the scope of your retail business, right? You're not in the business of plumbing. You need an expert to come in for that plumbing. And now this takes us to the third element, which is that worker, let's say that plumber, is customarily engaged in an independently established trade, occupation, or business of the same nature of that work performed. So keeping with the plumber example, right? That plumber, let's say, has an independently established business, right? In the trade of plumbing, has been doing this for years. That's what they do. You need to hire somebody for that plumbing job, right? They're not going to be your employee. That's a clear, easy example of where this test could be met, and you are engaging with them as a business essentially, and they're doing that work for you. Now, if you are, let's say, a clothing manufacturer and you are hiring seamstresses to help make your clothing, then that's going to be within likely, right, the usual course of your business as a clothing manufacturer, or creating clothing, and then you have people who are helping you to make that clothing, right? So that's not going to meet the elements. So again, bottom line here is ABC test. Again, you have to meet all of the elements. It's very strict. There are, under the statute, certain exceptions. Even if you fall under an exception, it doesn't mean that there isn't still a threshold in terms of determining that they are properly classified. It just means you're applying a different test. So bottom line is, if you're a new business, you're engaging in, you need a little bit of help, you don't feel like you need full-time employees, that sort of thing, and you're thinking about, can I just hire someone for a 1099? You want to work with legal counsel on this issue. And again, it sounds, doesn't sound helpful because, right, especially if you're a small business, you're still in your growing phases, spending money on legal counsel to make this analysis or hiring employees, yes, is going to cost you on the front end. But again, we'll see as you go through. I think you'll have a sense of why, again, it's important to get this right. All right, so that takes us to then the discussion of when you are hiring employees, again, understanding the difference between a non-exempt, or we also refer to this as hourly employee, or an exempt employee. So again, this status is critical because it's going to determine the rules that we have to follow for the employees throughout their time with us. So just like we start off assuming that somebody is our employee as opposed to an independent contractor, once we know they are our employee or going to treat them as our employee, we always are going to start with the assumption that they are non-exempt unless they clearly meet an exemption. And we'll talk about some of the different exemptions. But so that's your default, is you have employees, we're assuming they're non-exempt. Then you ask yourself the question, do they meet an exemption? So what we're talking about with our non-exempt employees, these are our hourly employees. They are paid minimum wage and overtime. They are paid for all their time worked. So it's important that they're properly tracking their time. So they're paid for all the time, right? There's no such thing as off the clock work in California. And we're also providing them meal and rest breaks, among other requirements that are in place around wage and hour. Now, if we do have somebody who meets the exempt requirements, this is sometimes also often referred to as a salary employee, right? It's hourly employee versus salary employee. That's not the technical term for it, but that's often what people need. And so if you have a quote salary employee, then it should mean that they're meeting one of the exemptions, that because it means they're exempt from the rules around being paid for overtime. We'll talk about what those requirements are, meal and rest breaks and the like. Again, why does it matter? Because misclassification is expensive. If you have an employee who is truly a non-exempt employee, but you're calling them exempt, that means they're getting paid just a flat fee for their services to you. You're not tracking their hours worked. That means they're not getting paid overtime. That means that they're not getting their meal and rest breaks and a whole lot of other violations that are going to come with it that can go back 3 to 4 years. And on top of penalties and attorney fees and costs. And you can see how this is, again, very expensive. And then there's also joint employer liability around these areas, as well as sick leave violations if you are in a joint employment situation with, say, a staffing agency and things like that. So again, always critical to make sure that you're aware of, first, that the employee is properly classified and that we're following the rules that are needed. Now, without getting too into the weeds on exempt employees, because most of the presentation today is focusing on some of the importance of our obligations around non-exempt, and we did touch on this in a previous episode as well, but just a reminder for our exempt employees, there's essentially 2 main requirements that need to be met. So you have to look at the duties that the employee is performing to determine whether they're primarily engaged in exempt duties. A lot of this is driven around whether they customarily and regularly exercise independent judgment. They need to be doing that for more than half the time in their role. And then there is a minimum salary requirement as well. This is generally tied to that statewide minimum wage. So they need to be engaged in duties that are properly classified as exempt, and they need to be paid a minimum salary. So generally, these employees are key personnel who are, have management, decision-making responsibilities. Our most common exemptions, these are also referred to as the white-collar exemptions. These are our executive, administrative, and professional. But ultimately, where you'll want to look for your exemptions is you'll want to refer to your IWC wage order, your Industrial Welfare Commission wage order that has more details for exemptions and requirements. In that very first section under applicability, that's where you're going to look for the rules and the requirements for those exemptions. Okay, so putting exempt employees aside now, because we're going to focus on what are our wage and hour obligations, what are the things that are important again for our non-exempt employees, because there are, of course, many roles, especially if you're, at entry level type positions, right? They're not going to qualify as an exempt employee, and so they're going to be non-exempt, and so we need to know what are some of the special rules around this. So some basic wage and hour foundations, some terminology that's important to know as an employer. A work week and a work day. These are technical terms, and they matter for purposes of things like overtime, scheduling, and the like. So a work week is that fixed recurring period of 7 consecutive days. Now, it can be defined by the employer, but there is a default, and we'll talk about that in a moment. If you don't have it defined, as long as you have a legitimate business reason for how you're defining it that way. We can't define work week in a way that is used to evade our overtime obligations, so just keep that in mind. Similarly, work day is any consecutive 24-hour period that begins at the same time each calendar day. So for one particular business, it might make sense for their work day to begin at 8 a.m. That might not be the case for every business. So again, it depends on what makes sense for the business itself. And then we want to make sure we are consistent with that, of course, and we're not changing it around, again, just to avoid overtime. So the California Division of Labor Standards Enforcement, or the DLSE, they have this presumption that Sunday through Saturday is the work week. So Sunday is that first day of the work week. And then the work day begins at 12:01 a.m. And then ends at midnight. So that's going to be the default if you don't have a policy or practice otherwise. You can, but again, just make sure you have a legitimate business reason for doing so. So why work week and work day matters is because we have to document, of course, all hours that employees are not only scheduled to work, but that they actually work. And then we'll talk again about more details for overtime. So another great resource for some of these other basic foundations, because again, today it's tip of the iceberg when it comes to a lot of these requirements. And later in the series, we are going to dive a little bit deeper into some of these subjects, but the great resource for you to know, again, that you should be very familiar with is the wage order that applies to your industry. So because of how important that is, and because there may be some of you out there who are not terribly familiar with, do you know which wage order applies to you? We have a couple resources for you here. On the DIR, the Labor Commissioner's website, they have all of the applicable wage orders, the current wage orders that are in effect. And we also at CalChamber have open to the public another wizard that helps anybody who is looking for determining which wage order applies to them through the form of a quiz. So really important, because again, that's going to lay out the foundation. There can be differing rules around meal and rest breaks, things like that. The wage order is really important. And don't forget, your wage order also needs to be posted up in the workplace. Okay, so going back to our non-exempt employees, of course, one of the things is they're paid by the hour. They have to be paid at a minimum wage. So just some reminders around that. For 2025 this year, that rate is $16.50 an hour. That's the general statewide minimum wage. We also have some industry-specific rates referenced there as well. The minimum salary for exempt employees is tied to the applicable minimum wage rate. So Our exempt employees have to make 2 times the statewide minimum wage. And that's the case for, for the general $16.50 an hour. For our fast food employees, that is also true. So that puts them roughly around the $83,000 range at that higher fast food employee rate. Healthcare is a little bit different. There's a different way to calculate where it's either 2 times the statewide minimum wage or 1.5, depending on which is higher. So again, that's just for those of you that are in those particular industries, but again, tied to that statewide minimum wage. We also talked about previously the fact that there are many local ordinances that have higher minimum wage rates. Again, that's based on where the employees work. That, luckily, though, does not impact the minimum salary requirement. So we're only focused on the statewide minimum wage rate when we're looking at that minimum salary. So our non-exempt employees, as I mentioned, they have to be paid for all their hours worked. We need to make sure we're having all their time clocked. And then that does include overtime, which gets paid at a higher hourly rate, which we'll talk about now. So overtime in California is unique because we have both daily and weekly overtime. Federal law only requires weekly, but California does impose a daily overtime. So if an employee works anything above 8 hours in a day, they get paid time and 1/2. They also are going to get that time and 1/2 hours for anything beyond 40 in a week. Now, they're not going to get it twice. So if somebody was paid, let's say worked 2 hours of overtime in a day, and they were paid that daily overtime, they're not going to get the 2 hours again of the weekly. So it can get a little complicated. Again, I don't want to get too far into the weeds. They're not going to get it twice, but we just have to make sure we're accounting for it, looking at it on a daily basis and also looking at it across the board and making sure if there are any additional overtime hours beyond 40 that they weren't already paid for the daily, then they are going to get that as well. They're also going to get time and 1/2 for the first 8 hours on the 7th consecutive day in the work week. Double time is going to kick in if they work above 12 hours in a single day, or if they work more than 8 hours on that 7th consecutive day in the work week. Now, an important thing to note is that overtime does need to be paid even if it's not approved. So let's say you have an employee who ended up working longer than when their shift ended. Maybe they got really caught up in something, they lost track of time, and they just were working and they realized, oh, it's now 5:30 and I was supposed to clock out at 5. You still need to pay them for those 30 minutes, even though they didn't get approval. Even if you have a policy that says, we ask that you get approval before working overtime. Now, that doesn't mean you can't discipline them for the fact that there's a violation in the policy, but we still have to make sure that we are paying them. All right, now how overtime gets paid is at what is referred to as the regular rate of pay. So it's not going to be paid just at their hourly rate. So it's 1.5 times that regular rate of pay. So regular rate of pay, it may not always come into play, but it's important to know that it includes all compensation that an employee receives in the work week. You notice there's that work week again, right? So this is where knowing where your work week begins and ends is going to matter. So it's not just their hourly wages. It can also include piece rate earnings, commissions, or non-discretionary bonuses. Now, the method for this around non-discretionary bonuses is going to depend again on the type of bonus. So we do just caution you to work with legal counsel around that if you have questions. But even if, let's say, somebody has 2 different hourly rates that apply, maybe they have a second lower rate that applies for travel time, right? We have to, that's going to include and be factored into their regular rate of pay for purposes of overtime. Okay, so another thing that is going to be unique for our non-exempt employees that we need to make sure we are providing is meal and rest breaks. So our non-exempt employees need to have a meal period. It needs to be a minimum of 30 minutes. And this needs to be provided before the end of the 5th hour worked. Another way of thinking of that is no later than 4 hours and 59 minutes into their shift is when they should be starting their meal period. there are penalties for not providing a timely meal period in addition to some other requirements. So it's important that they are getting that on time. Now, this is unpaid time, which means they clock out for that. And there is the ability for it to be waived, but only if the shift is 6 hours or less. Does an employee have the ability to waive that? And that is by mutual agreement. Now, sometimes we get questions about on-duty meal periods. These are very, very rare. They tend to be limited to certain industries and circumstances. So if you think you're covered under an on-duty meal period justification, or you think there's reason for an on-duty meal period, again, you want to work with legal counsel around that. Now, in addition to that 30-minute meal period, employees must get a rest period. So this is a net 10-minute rest break for every 4 hours worked or major fraction thereof. So for an 8-hour shift, that means they're going to have 2 net 10-minute rest breaks. What do we mean by a net 10 minutes? They have to be able to get to the place where they have the ability to rest. So if it's like a large work site or a warehouse where they have to walk a long distance or get somewhere, we're not going to count the 10 minutes until they are actually at that place, right? Or in an agricultural setting where, let's say, maybe they have to walk a great distance. We're not counting the 10 minutes until they actually make it to where they have the ability to rest. The thing that's unique about rest breaks, and it's different from our meal breaks, is that employees are not clocking out for these. These are just guaranteed. They need to be provided. We should be documenting that they're happening, but they're not clocking out. So again, meal and rest breaks can be an entire episode in and of itself. I think it will be in the future, so we will have more details. But again, just want to highlight, again, this is why it's important, right? Because we have very technical rules that we have to follow for our non-exempt employees. All right, now timekeeping and payroll records. Again, very important because a lot of our obligations, as you can see, come from the number of hours worked, because we have overtime obligations, we have our meal and rest break obligations. So we need to keep accurate records of all the hours that are worked by our non-exempt employees. And this is to comply with both state and federal law. So we need to have certain information, the start and end time for the employee shift. We need to have that clock out time for when the meal period starts, and then also when the meal period ends, which is basically then that employee clocking back in to their shift. And it should also be showing, right, that meal period was provided by the correct time. So as we talked about, we have to provide the meal period by a certain time within the shift. And so that's what our record should be showing. Now, this is regardless of whether the employee voluntarily chose to perform work during that meal period. Again, we can't force the meal period on our employees. Excuse me, we can't force them to not work or take the break, but we must provide it. And we need to document that we are indeed providing it. Okay, and then payroll records. Now, again, this is not something that is unique only for our non-exempt employees. We need to keep payroll records on file for all of our employees, whether they're exempt or non-exempt. We need to keep these on record for at least 4 years at the place of employment or at a central location within California. They need to be properly dated, showing the month, the day, and the year. And then, of course, California law also requires us to maintain an accurate record of employees' hours of work and compensation. So what has to be included in payroll records is very specific, as you can see. So the full name, home address, occupation, social security number. If you have employees who are under 18 years of age, we need to include their birth date and their designation as a minor. Time records, again, that are showing when the employee begins and ends each work period. We won't have that for our exempt employees necessarily, right? Because they're not clocking their hours, but we still are tracking as far as the days that they work. We're still keeping attendance in some fashion because again, that's a whole separate ball of wax in terms of rules for deductions and things like that with our exempt employees, but we're still are keeping records in terms of, you know, whether they're attending work or not on a particular day. Meal periods, split shift intervals, total daily hours worked. Again, for that meal period, we need to make sure that we're getting the in and out. If the meal period during which, if you know, operations have ceased and there's authorized rest breaks, you know, those don't have to be recorded. As I mentioned, they're not clocking in and out, but we should still be keeping a log of the fact that rest breaks are provided and taken. We also need to include total wages paid each payroll period, including the value of any board, lodging, or other compensation that's given to the employees, and then total hours worked in the payroll period and applicable rates of pay. Again, that's going to be for our non-exempt employees. Again, if they have multiple rates and if we have things like overtime. Okay, and then of course, how are we, you know, when it comes to paying our employees, we need to provide an itemized wage statement, or this is also referred to as the pay stub. So California law has very, very specific requirements that employers must provide to employees on the wage statements, or also referred to as the pay stub. This is all coming from Labor Code Section 226. It describes what must be included in that written statement. It's described as a detachable part of the check, draft, or voucher paying the employee's wages, or a separate writing if the wages are paid by personal check or cash. But what we know is that wage statements need to contain all required information on their face. So this means it's considered incomplete if we are requiring an employee to go outside of the wage statement for any piece of that information. Everything needs to be provided right there on its face. There are hefty financial penalties for employers who do not follow the requirements. I mentioned things like PAGA claims, class action claims. A lot of times these come from wage statement violations because, and imagine, right, you have a standard wage statement that you're issuing to your entire workforce, and if those are lacking any required information, that's a violation per employee. And then, you know, each time you're issuing the statement, you're having that violation. So again, these violations can stack up and result in very hefty liability. So there are 9 categories of information that must be included in wage statements. There's also some paid sick leave requirements that we'll touch on as well, and some specifics that if you pay employees by piece rate, I know that doesn't tend to be terribly popular these days, but for anybody out there who is doing it, you have particular obligations around that. So, you know, starting with the gross wages that are earned in the pay period, the total hours that are worked in the pay period. Again, this isn't going to apply to our exempt employees because we're not tracking their hours that they're worked, because we're paying them for doing the job, not for the hours that they work. All deductions, including taxes, disability insurance, and health and welfare payments, need to be reflected. Net wages that are earned in the pay period, the inclusive dates of the pay period, so basically the start day of the pay period and the end day of the pay period, the employee's name and the last 4 digits of their social. You can also choose to have a substitute, their employee number, for example, on there. We need to have the full name and address of the employer or the legal entity that is the employer. There's a special rule there for farm labor contractors. All applicable hourly rates that were in effect during the pay period and the corresponding number of hours that the employee worked. So again, if they said, let's say there was a particular rate for travel that's different from their standard work that they perform, we have to show both of those rates and then the corresponding number of hours that they worked for each of those rates. The number of piece rate units earned and any applicable piece rate. Again, this is if they're paid on a piece rate basis, which they may not be. And then a special rule for any temporary service employers, they also need to include the rate of pay and the total number of hours worked for each temporary service assignment. Licensed security services are specifically excluded from that requirement. And then, as I mentioned, there is a specific requirement for paid sick leave to also be reflected on the wage statement. So California has a mandatory paid sick leave law. I'm sure many of you are aware. Hopefully you're aware, because again, it is mandatory. And we need to provide written notice of the amount of paid sick leave that's available for use on the wage statement. If we provide another leave bank in lieu of the sick leave, that still has to be reflected on either the wage statement or a separate writing that's provided on the designated pay date with the employee's payment of wages. If an employer uses what's referred to as an unlimited paid sick leave or unlimited paid time off, then they can simply indicate unlimited on the wage statement, and that is sufficient. Again, that is an entirely separate discussion as far as what that means to have an unlimited policy, but that's how you would comply if you do have that. And like I said, paid sick leave has it's all of its own requirements. We'll be covering more details on that separately as well. It's a topic all on its own. So here is just an example of what a wage statement would look like with all of those requirements that we touched on. Again, every employee is going to have a wage statement, whether they're non-exempt or whether they are exempt, right? What's going to look different though is for an exempt employee, you wouldn't have these different rates of work. You would be seeing the their flat salary that they get per week. But you know, you'll see a lot of the things that we talked about, right? The period that the pay period is beginning and ending. What is the pay date? In this left-hand corner at the top, this is the employer's information. We also have the employee's information. And so for a non-exempt employee, right, what is the regular hours that they worked? Then you see the overtime that's paid at a higher rate. And then, you know, if they have other rates, you know, let's say for travel, it doesn't look like they have any here, but this is what it's going to look like. Special call outs for the piece rate. Again, that might be more rare, but you're going to have the total gross pay for the period. And then, of course, the list of any of the deductions. And then lastly, here's that California paid sick leave line that we talked about. So again, this is just a visual example of all the things that need to be on a wage statement. As I mentioned, they're very technical requirements. We need to make sure we have them all. All right, and so that is, again, not an exhaustive list of all of the things that we need to do. So I'll just leave you with some key takeaways and reminders of what we talked about today. So again, when you're looking for employees or for somebody who's conducting work, the first thing you're looking at is, you know, we're going to assume they're an employee. If you think there's even a possibility of them being an independent contractor, look at that ABC test. If you think it falls under an exemption, make sure they fall on that statutory list and make sure they're meeting the more relaxed rule. But when in doubt, you should really always be consulting with legal counsel for that. Then we know somebody's going to be our employee. We're going to presume that they are non-exempt and they're subject to all of these various wage and hour requirements, unless we know they can meet one of those exemptions. And then, of course, we have to maintain the accurate timekeeping records, maintaining those. Again, it's critical to do so. We have to make those available to employees upon request, also to the labor commissioner upon request. So we want to make sure we're keeping those records going at least 4 years back. And then, of course, making sure your wage statements have all of those items that we talked about. So that is everything. So yeah, I'll turn it over to Isaiah to see if there's any questions that we want to go ahead and take.
Bianca, that was amazing. Thank you so much for the in-depth knowledge around this particular topic. I learned a few things. Exempt versus non-exempt. You said something that I think is very important. Misclassification is expensive. So this is important. There was also a website that you mentioned that I just want to highlight again, where you can find the rules for non-exempt and exempt. I believe you said the IWC.
Yes, so I think that that lives at dir.ca.gov is the main website
Awesome.
where you'll be able to get that. So there's a whole history with the IWC. They are not
Okay.
actually a formal commission anymore. Their documents that were created when they were an active body is actually still referred to by the labor commissioner when enforcing these rules. So we still rely on them for the various wage and hour rules.
Awesome.
And so those do live, let's see, and I can go back to my slide I can probably just go back to it here and we'll have it up on the screen.
Yeah. Thank
Um,
you for that.
because there's the labor commissioner and the DLSC, they are technically separate, but they're also related agencies. So I sometimes get confused on which one is where. So yes, this is on the dir.ci.gov.
Awesome. Thank you. Thank you. I feel like that's super important. All this great information that you're sharing. Here's where you can dig a little deeper. So thank you for that, Bianca. A lot of great things you mentioned. The difference between meal breaks versus rest breaks. Defining a work week versus a work day. Um, Awesome, awesome, awesome. I think one of the cool things that stood out to me was there are jobs that give unlimited paid sick leave and unlimited time off. That sounded pretty cool to me. Sounded pretty cool to me. But I do have a few questions, Bianca, if you wouldn't mind answering. What are some potential legal and financial consequences of misclassifying a non-exempt employee as exempt?
Yes, this is a big one. So again, what we just scratched the surface on today was some of the bigger rules that are required for a non-exempt employee. So first one is, remember, daily and weekly overtime. So if they are working long hours, you are going to have to pay for it as the employer for somebody who's non-exempt. Now we know for our exempt employees, they get paid a salary no matter the number of hours they work for us, right? We're paying them to do a job. And so we can work our exempt employees long hours, no problem. If that's what they need to do to get the job done, they're traveling for work, they're working into the evenings, they're working on weekends, they're still going to get the same salary, right? But for our non-exempt employees, we have to be tracking all of that time. And as you can see, once you get past 12 hours, now you're in double time. So there's a lot there. There's also day of rest that can kick in if they don't have a day of rest in the work week. So there's a lot there. So that's just one component. Then the other issue you have is meal and rest breaks.
Yeah.
This has to happen again. There's two rest for just a standard 8-hour shift. You're going to have two rest breaks and you're going to have one meal period that needs to be provided. The one thing that I didn't probably call out enough, if I even did at all, and I'll say it now, is there are penalties if you do not provide this. So whether it's they're getting it late, maybe they're not getting a full 30 minutes, they are interrupted in any form or fashion, we are somehow controlling their meal period in any way, that results in a violation, which is 1 hour of premium pay that is paid at that regular rate of pay that we talked about. So they're getting extra compensation for that, basically. And so that adds up. You can have up to 2 hours of premium pay for any given day. That's the maximum. But again, if you have overtime, right? So you got failure to pay, overtime, penalties that stack up on top of that, plus the failure to provide meal and rest break, the premium that's owed for that. Then you've got wage statement violations because you haven't been showing the number of hours that they're working. You haven't been tracking the hours that they're working because you're calling them exempt. So the list goes on. You can see how this snowballs into a lot of unpaid time that then is owed to an employee, they can go to the labor commissioner's office, file a wage claim there. It could potentially get settled at that level, but they could also potentially file a lawsuit. And the Private Attorneys General Act allows for an employee to file not just behalf on for themselves, but also other aggrieved employees who may have these similar. So it operates very similar, not quite like a class action, or could be. And there are a lot of, again, additional penalties, attorney's fees, costs that come along with just defending these lawsuits. So there's a lot to it. And so especially for employers and businesses that are on the smaller side, and if they don't know what they don't know around this, they can easily get themselves into a lot of trouble if they're misclassifying. And then, because don't forget, we also have, even if somebody's paying somebody, let's say, is exempt, sometimes people don't realize that the exempt salary is tied to the minimum wage. So you might have somebody who, let's say, they meet the duties test based on their duties, like they could be exempt, but maybe you have an employer who doesn't realize, oh, I have to make sure this is keeping up with twice the statewide minimum wage every year, and they're not giving their people raises.
Right.
That can also be a problem.
That's really good. That's really good. And, I want to say thank you to CalChambers. Thank you to the Small Business Policy Council for sharing this information with us, because as small business owners, there's a lot of work to do behind the scenes. Tons of resilient, strong, courageous small business owners, especially in these wavering economic times. And so this information is important. You said it a few times. We want to reduce and steer you away from those hefty fines, those hefty penalties. So we want to make sure that all our small business owners has free access to this information and this knowledge. I have one more question, Bianca, if that's okay. We are in the technology age. Technology is taking over. It's developing and evolving rapidly. So with technology on the rise, are there any tips for working with technology or any other proven tools to keep track of payroll efforts? I know that's a touchy subject, but how does technology sort of fit into some of this?
Sure. Well, technology can definitely be your friend when it comes to wage and hour time tracking, right? So we talked about the fact that you need to track employees clocking in, clocking out, right? There are a lot of systems out there that people can do that. Employees can, they can do it directly from a company issued device. I'm not going to even open the door on like personal cell phone. If you're requiring them to do that, just be aware that that's also going to cost you from a business expense reimbursement. But let's say, they get to their work issued laptop every day and they can just clock in on that. That kind of stuff is great, again, because they're going to track it down to the fraction of a minute, right? And we can ensure that we are paying for all of the time. Now, that said, we have to still review those records, right? Whoever is submitting payroll, we have to make sure, or training our managers or whoever is responsible for that, to make sure that they're accurate, that they accurately reflect what hours somebody worked. And this is just one example, right? Anytime you're using any kind of tools, at the end of the day, for employers, it's important to know whether you're hiring somebody you're outsourcing your payroll, right? And you're relying on somebody to do that for you, or you're utilizing a system, whatever technology. There's a lot of bells and whistles out there. The one thing to know is that if you get it wrong, it's going to be on you at the end of the day. And so it's important to have those checks and balances, again, making sure that a human is going through and verifying the accuracy of the time records, so that you don't end up with discrepancies and things later that you didn't even realize were there until now somebody's coming for a claim because they weren't receiving. Now, luckily, our employees are going to help us with this too, right? Because if there's an error on their paycheck and it results in them getting less than what they're owed, we can catch that and that sort of thing. But not all the time. And again, making sure that we're documenting the fact that they're clocking in and out for those meal and rest breaks, that we're still keeping some record somehow of the meal and rest breaks, so that if an employee down the road is claiming they were never provided, how are you as the employer going to defend yourself in that? So At the end of the day, just make sure you're reviewing it and you know that you as the employer are still responsible for the accuracy.
Awesome. Great, great in-depth answer. Thank you for that. Technology is our friend, but we still, as small business owners and human beings, have to continue to do our due diligence, crossing our T's and dotting our I's, with what I would say. So thank you for that, Bianca. Thank you so much again for this great information. It's already April. We're looking to host another webinar the last Friday of May. And these things come up quick. So I just want to say thank you for this information. If you have any questions, if you're seeing this, if you're watching this, if you have any questions, there are links where you can drop a question and we will answer your question to the best of our knowledge and our ability. Please ask away. We want to make sure you have all the information, the knowledge, the resources you need in order to thrive, scale, and be successful. And so, Bianca, thank you so much to you, the California Chamber, the Small Business Policy Council. You're amazing, and I can't wait to do the next one. So have a great one, and until next time.
Thank you.
All right,
See you
Bianca.
next time.